Hi, everyone. Welcome back to another episode of VCTV, which is the Venture Capital TV, and it's from LATOKEN. Back again on another topic, very interesting topic, and very, very relevant for today's time. So, we're going to talk about the tokenization of assets, how it's going to disrupt investing in the financial industry, investments in general. So we're going to cover a lot of topics. We're going to cover what is tokenization, how can we tokenize assets, what assets can be tokenized and what cannot be, what are tokens, like types of tokens. We're going to touch base a little bit on ICOs as well, because I think the ICOs are back. People are doing a lot of token sales and private sale, pre-sale. So we're going to touch base on different things. So that's why we've got two experts, Harsh and Jerry. So Harsh has been from Our Ventures, has been with us before as well. So he doesn't need much introduction, but I'm going to ask you about your introduction later. But today we've got Jerry, who is a specialist in this area. He's also advising various startups in this space. So we're going to talk about these topics and obviously give some information to our viewers, because I've got a lot of messages from a lot of people asking me about STOs, how can they tokenize their shares, what's better between stocks and tokenizing shares of a company. So yeah, so it's going to be very educational and engaging. So today, for the first time, I've got a new colleague from LATOKEN who's going to be with me today, David. Hi, David. Welcome back. Welcome for the very first time, not welcome back. Sorry. So yes, so before I start the introductions of my speakers today, let me just introduce myself. My name is Sunny Mohanty. I'm the regional director of LATOKEN based here in Singapore. I moderate VCTV and host technically every day, and this is a very nice way of staying connected with our investor community and also our founder community. So yes, there you go. That's about me. So let me just introduce our speakers today. Let's start with Harsh today. Harsh, welcome back. How are you today?
Hey Sony, glad to be back as always, and really glad to meet interesting speakers from across the world, sharing their knowledge in various diverse topics. Right, meeting Jerry for the first time. Hopefully, to learn something new, something fresh in today's session. So, a small background of myself. My name is Harsh Shetia. I'm a venture partner with Our Ventures. I'm also a founder of Startup Hackers. It's a Facebook group primarily focused towards early stage startups. College grads and other early stage people. Kind of help give them the initial level of growth and mentorship so that they can drive their business and understand how to structure a startup. We currently help startups raise funds all the way up to $10 million, which is primarily in India, Singapore, Dubai, and USA. We are completely sector agnostic, maybe it be fintech, health tech, marketing tech, etc. And any startup needs any help whatsoever can feel free to reach out to me. Thank you so much.
Perfect. And I connected today a startup with you. Thank you so much, Harsh, for your help. Really, really helpful. Honestly, thank you so much for that. We okay. I've got Jerry. Is the middle name? That's what I can pronounce for now. Jerry, welcome to VCTV. Please help introduce yourself. What do you do? Which company do you represent? A little bit of background as well. Thank you.
Okay, my name is Eleftherios Gerifloros. I'm Greek. You can call me Jerry. It's easier. I'm a fintech expert. I'm also an author and advisor and consultant on all tech, everything relating to artificial intelligence, fintech, and blockchain. I've written 2 books, and I'm contributing author of 4 books. My last book, the Financial Revolution, Bitcoin, Blockchain, and the Democratization of Wealth, has just been published on Kindle just now. And I write about all these new technologies. I write about artificial intelligence, blockchain, and especially tokenization. I believe tokenization is going to be very, very big in the coming months and years. The reason for that is there is now a big uptake in Bitcoin, and with that, a lot of cryptos. And now CBDCs are coming into play. A lot of central banks are already testing it, piloting, and even coming very close to circulating CBDCs. So I think the whole tokenization market is going to be very big. I also I'm a CEO and founder of MoneyDrome, which is a multi-chain investment platform for digital assets and securities. So we are now in the startup phase, and we are working with many parties to see here, because I'm based in London, to see how things will develop in the fintech landscape of London, because London is in one of the fintech capitals of the world. We have, of course, had the Brexit behind us. There's been some trading that has moved towards Europe, £6 billion daily that is now being transacted in Europe. So the government is trying their best to make London a fintech capital. For the rest, I also work with fintech startups, and they are involved mostly in crypto and blockchain. So that would be my introduction.
Perfect. That was a great introduction, Jerry, and welcome to VCTV. And we're going to learn a lot from you because of the kind of experience you have in the space. So, talking about just discussing about the topic itself. We have a lot of projects who are from traditional hedge fund, traditional investment, coming to me asking for tokenizing their assets to raise funds. So let's start with that first. So what does tokenization of assets mean to you? And what assets can be tokenized and what cannot be tokenized? Can we start with Harsh?
So the tokenization of assets, primarily if you look at it right now, is focused most towards gaming and the arts sector, right? Where you see a lot of these tokens in the gaming sector, where people play online games and they get these tokens. At the same time, it's being used in the art sector as well, where you have actual arts, physical arts being tokenized in a way that people can kind of access and purchase those tokens as well. However, personally, if you ask me, I don't see any limits in terms of what can be and cannot be tokenized, because the opportunity, in essence, the value of a token is determined by the buyer and the seller, right? So as long as you have someone willing to buy it, there's always going to be open opportunity to create more tokens in terms of more unique opportunities for different sectors. Right now, it's been primarily focused towards gaming and arts, but I definitely see its application in other sectors as well.
Right, interesting. Um, uh, Jerry, from your perspective, what all asset classes can be tokenized?
Basically, you could put just about any real-world assets on a tokenized platform. The ones that we see have the biggest movement are, I would say, assets like property. That would be a major one. You have now also ships, planes, transport companies being tokenized on the blockchain. In the transport sector, you see a lot of blockchain opportunities where the paper trail is reduced onto the blockchain, and in combination with that, they make payments in crypto. And then the next biggest ones, I would say, in the tokenization would be collectibles, art, patent rights, copyrights, music rights, film rights, NFTs. The list is quite extensive what can be tokenized on blockchain. And I think it's important because with tokenized assets, you can trade on value on the market itself. I'll give you an example. If you would take a building that is owned by a property company and it's listed on the New York Stock Exchange, the value of the property will remain constant throughout the bar any sudden changes in the market value of properties. It would stay constant. So you would buy into the equity of a company. So the share price of the equity of the stock price would go up and down, but the asset itself would not go up and down. If you would tokenize the building and you would put it on the stock market, that value could fluctuate throughout the day. So you could start trading actually real world assets and actually make gains or losses in a short period of time. So the time frame would be a lot different than with a company that owns the property. In the tokenized world, you're dealing and trading with tokenized assets, and I think that makes it so interesting. And I also believe that because there is going to be a lot of tokenization of assets on blockchain, there's also going to be more interest from retail investors. So it won't be just the big banks and the financial institutions, but it will also be your average retail investors. And with that, it will increase liquidity in the markets. So I think tokenization of assets on blockchain is going to be really big in the coming months, especially because of the crypto upsurge and because of CBDCs coming into play and becoming eventually mainstream.
Perfect. I have an additional question to that. So I have a client who wants to tokenize mining copper mines and gold mines. So how easy, I mean, obviously you both of you mentioned that we can technically tokenize everything. So where do they start?
That's a tricky one because when you tokenize something, you put it in conjunction with a smart contract. So it's a coded contract into the blockchain, and everything is preset pretty much in stone. Now, what is the variable from a copper mine? The variable is the quality. So assuming that the quality is steady and the same, then it's easy to tokenize it. But you need to have some kind of certification body for that copper, that you know that it's a certain quality, because you could have copper that has been melted with other materials and it's not as pure as it's supposed to be. So tokenizing a copper mine is a chance on itself. It's different if you would tokenize, let's say, a gold bar, which has been certified and has an insignia on it, and its purity has been determined already. Then it's easier to tokenize that asset. But if you start at the mine, you will first have to go through the whole process of quality control and certifying the product that the mine is producing, be it copper in this case. And then you can go to the markets and put it in stone, put it in a smart contract. So it's a little bit tricky to start at the mine level, beginning there. It's different if you have a finished product that has already been certified.
Perfect.
Yeah. So to kind of build to that point, right? There is a startup in India I know. They're working on the finished product, right? They're primarily working in the jewelry sector, where they're trying to tokenize jewelry and kind of use blockchain and decentralize the entire thing, built it on Ethereum, and create an crypto marketplace for jewelry products, right? There's a very interesting use case. So it's possible at that stage where the product value is kind of defined. In the early stages, during the mining stage, the product value is still not defined, the product quality is not defined, and how do you kind of structure that? Those are kind of some of the challenges. And as of right now, you can tokenize assets, but you cannot add value in terms of actions, right? So the entire mining process from start to end, you can create a smart contract around that, but how do you kind of tokenize the entire effort that is being pulled into it to kind of extract the copper as well? That's another phase of it, which we kind of haven't even gotten into yet. So that's another element to it. So right now there are lots of multiple variabilities in trying to tokenize the entire mining process per se.
So tokenizing gold and precious metals like rubies or sapphires, is it the same or is it different?
I would say it's different because gold is, it's a known metal and it's sold in at the highest level. Central banks have it, jewelries, gold mines, and they all work with certain standards. So the only thing that's determined when they make gold is the purity, and that is assessed and it's certified and it's marked into the gold bar. And the certifying associations, authorities from whatever country they are, they have certain standards they have to adhere to. So gold is something that is, you can, when you are buying gold from someone, from a major distributor, wholesaler, mine, or jewelry store, you can pretty much be sure that you're getting that what you are buying for. I'm not talking buying gold at some market on the side street. I'm talking about a serious market or marketplace, and that makes the difference in the world because the purity is being assessed and it can be verified and controlled. And if you put on blockchain, you could even put the whole chain from production till the customer, till the consumption, till the consumer that's buying jewelry. That can be tracked on blockchain, and they're already making different platforms where they could track the gold from production to consumer, and that is then registered, and we can track that down. and that makes a difference in the whole process. If you start with other materials, other precious metals, it is less. I mean, silver would be still good, platinum and so on, but if you start going down the value ladder, then it's a little bit more difficult to have a standardized level of the quality of what you're selling. So that's why in anything that you would want to put on blockchain, it has to be assessed and certified for it to be able to trade. You want to know that you're trading the same asset with the same characteristics and the same quality.
Great points. Great points. Thank you so much,
So
Cherry.
to kind of build on that, right? Jerry very rightly mentioned regarding the quality of the gold bar, which is kind of used with the standard, right? The current gold standard is like 999, 925, the other kind of standards which are followed. At the same time, if you look at the other end of the spectrum, in the finished jewelry, right? In the finished jewelry, there's a lot of other element as well, like the creator's design that has its own value component to it as well, the kind of craftsmanship required to build finished jewelry. So at the same time there's another elements being added to that as well. So that's why you could look at it as a combination of a regular token, combine that with an NFT, which combines the manual element of it as well, which is kind of taking the raw gold into a finished jewelry product. So it's going to be a combination of both, because you need to capture the essence and the value of the manpower, the creative power, the design which is being added, the creativity which is being brought by the designer into that product. You need to account for that as well. So it could be a combination of a value token and an NFT for that matter, to kind of create a finished jewelry product per se.
Right.
Yeah, I fully
Great.
agree with you. The thing is
So go
about
on, sir.
jewelry is you have different aspects. Like you say, you have the product. Let's say you would have a golden watch with diamonds. You would have the diamonds which are certified. You will assess the 4 C's, the carat, and the clarity and the color, and you would assess all of that in a certificate. The gold would be certified as well, and then of course you have the work of the person that's designing the jewelry. If you would have Harry Winston, that would be a very high level and a high markup on the jewelry because it's made by some well-known expert jeweler. And then if you would make it by someone that is less known, that would affect the price as well. So in jewelry, you would have quite some variables built in selling jewelry, because you would not only assess the material of which the jewelry is made, being gold or silver or platinum and the diamonds or emeralds, but you would also assess, like you say, the work of the one designing the jewelry and the one actually making the jewelry. And then of course you have people in between, the distributor, the custodian, the one that's selling it, and so on. So all these factors have to be taken in consideration. So it adds a little bit to the whole process of doing all of that on blockchain. It is not impossible, but you need to have the right approach. And I think that are tokenizations which require quite some specialties. I believe that people that are in the business, let's say a Harry Winston, a Cartier, they could do stuff like that. If you start that from scratch, it would be hard to prove provenance, where does it all come from, and also to prove quality and expertise.
We've got it. Thank you so much. I think we've got a lot of viewers asking us a lot of questions. We've got a question to take. Hasmi, can we have the question? Yeah. How do you properly price tokenized assets in a way that creates trust in the product? Are oracles used, and if so, how do they ensure the data from the oracles is reliable and accurate? Who would like to take this question?
That's a good question, but a tricky one. I'm thinking about the answer. I'll leave that to someone else to answer. I cannot.
Maybe.
So essentially, what happens is in each and every tokenized asset, right? The fundamental thing in any economy is about trust in the value of the product, essentially. So it's a question of a mutual trust kind of a thing. Even the currency, if you look at it in today's day and time, it's just paper, but the trust has been built by us. We have assigned that value to that piece of paper and calling it's valued at $10 or $20 or whatever might be the case. So that is why there is a centralized authority, which is the US Federal Reserve or the Singaporean bank or whatever, that kind of puts the centralized value over that, right? So that is exactly what's going to be required over here as well. We need to have a standardizing institution or a standardizing an authority as such, which can kind of prove that for each and every asset class per se, and they'll kind of give a calibration of sorts to that asset in question.
Right, got it. Sure. I hope that has helped Marco to sort of get his answer to his question. Thank you so much, Harsh. Yeah. So talking about tokenization, I would like to also drill down little bit to the tokenomics part. I think Harsh obviously has a lot of experience before, as you mentioned. So let's talk about what. So before you start a project, so what are the different attributes to take into consideration, and how tokenomics is an important aspect to that? Yes.
Correct. So tokenomics is essentially how so you just have a real physical world, right? You have a currency, then you have a product which you want to buy, and someone is willing to sell it, right? That's exactly the kind of situation you need to create in a token economy as well. So there are multiple parameters which one needs to consider while creating the token economy. First and foremost being the value of the product or the service that is being offered, right? That is the root, that is the primary fundamental of what exactly is being exchanged. So there needs to be some value created over there. Additionally, are the number of tokens finite or infinite, right? The current reason why Bitcoin is so popular is because there's a finite number of tokens, and same applies for the other current cryptocurrencies as well, right? You can't just keep on mining more tokens as you go. As in, you can mine right now, but there's an upper limit which you cannot go beyond. So if you kind of put that adds a lot of value to the tokens, because there are in limited amount, and anything that is scarce always has value. So that is something which people need to consider. Also, you need to consider how easy it is to kind of exchange those tokens, right? The exchange platform, the exchange mechanism needs to be extremely fluid, extremely simple, so that people don't have to worry about multiple hassles in kind of settling that out. Additionally, it needs to be balanced out probably by something like a stable coin or something of that sort, to kind of it gives a more realistic element to it, and balances that with the real world currencies as well. So it's not like it's completely happening in the crypto world, but it kind of offsets with the balance in the real world as well. So these are some of the parameters which need to be taken into consideration when you're kind of building your own token economy.
Great, great. I'm going to come to you about stable coins later. So let's just hear it from Jerry as well.
I didn't quite get the question because you was interrupted the audio.
Yeah.
Could you repeat the
So
question, please?
what are the parameters taken into consideration while deciding the token economy of a project?
Well, it depends how many cogs and wheels are involved into the project. I mean, if you are talking about tokenization of a mine, we just went over it, how much it involves different factors to tokenize. If you're talking about jewelry, we're talking about how many different factors come into play. Let's take real estate, for example. You could tokenize real estate, but real estate property, there's also a lot of factors that come into play. I mean, you have one thing, the regular retail property market or the commercial property market that fluctuates. I mean, it stays steady throughout the year or years, but it will fluctuate. And then you have the fluctuation of what the property can bring into income. So if you have rent coming in, that's supposed to be steady. Now, we just got hit by a pandemic, global shutdown, companies going bankrupt, people not paying the rent. So that affects, these are outer circumstances that affect the income of that property. So when you
Right.
tokenize this now, there is where you set in stone in an Ethereum contract that this amount is going to come in as rent, and then it's going to be distributed to the token holders. All of a sudden, that amount is not coming in. So it poses a big problem when unforeseen circumstances come into play. And that's the thing about tokenization. Uh, the difficult part is to set it all into contract, to put it in a coding it into a contract where all factors are taken in consideration, because there's a lot of unforeseen factors that come into play when you have a lot of different parties involved into a tokenized item. If you take an item that is uniform, coming back to gold or diamonds, those are things that are set in stone. There's not much variable into that. it comes at a certain price. Price of gold goes up and down, but it's the dynamics which are known and have been in place in financial markets up till now. When you're tokenizing new projects, like you say, you're
Yeah.
entering a new way of doing tokenization, and that poses problems because a lot of people have been wanting to tokenize a lot of things. For one thing, let's say shipping. My background is also into shipping. If you tokenize a ship, the shipping market is very volatile, and a lot of factors can influence it. A war outbreak, a pandemic outbreak, you name it. So the value
Right.
of a ship can go up and down very dramatically. And so how do you code that into the smart contract? So I have yet to see one tokenized uh, project that is really doing that what they had set out to do, and it's working like planned. Sometimes you make the right smart contract, you do everything properly, and then you have these unforeseen circumstances that affect everything. And in a tokenized situation, you're stuck with a smart contract. And when it's coded into smart contract, it's not easy to change around. You have to go to the governing body or to the consensus. It becomes easier if it's a permissioned DLT where you have a certain authority or governing body where you can do changes that are necessary to keep the project going. So tokenization does have some challenges, and that's something that depends on each different situation.
Right. Sure. Thank you. We've got another question to take. I think this is an easier one, I would say. So I think people are enjoying this. Where's the question? Sorry. Um, Hasmik, can we have the question? I think this one. Yeah. Okay. So this is the question. Security token would be a hybrid between shares of a company and a cryptocurrency, with the advantage that they have a lower cost than stocks and the security and advantages of blockchain technology. Understand and what is required license or what? That's kind of a little vague.
Yeah, it's a little bit vague.
So what we can do, we can talk about the types of tokens we have. So for a project owner or a token issuer, so how do they decide which token to go for? We have the utility, we have the securities, now we have the stable coins, DeFi tokens. So how, when they're writing the token economics, what are the factors they need to take into consideration for coming up with the type of the token? Hush.
So I would say suggest a combination of two. However, the right amount is going to depend on each and every project. However, it needs a combination of all of them as well, right? Utility tokens have their own function, which because they function as a currency in the token economy, right? So they have their own role. Security token have their own role in terms of providing asset value to the long-term assets which are there in the economy. DeFi tokens have their own value, and stable coins are, I think, have become mandatory in pretty much every token economy in today's day and time, because you needed to kind of validate with an established fiat currency outside, right? Because without that, you're just kind of playing around in the crypto world and you don't have anything to back it up. I believe probably that was the difference between the ICOs which I was seeing in 2017, 2008, the crypto boom which I was seeing over there. They were completely crypto without that backing, and that is why the entire it led to a lot of fake bubbles which are being created. However, now with stable coins being more prominent in the entire situation, it kind of adds more credibility to how the entire token economy is structured. So that I believe is going to be very crucial. At the same time, I see a lot of expansion of NFTs as well, because NFTs can create a lot of intangible valuable tokens in the market, where you have, because each NFT is kind of having its own uniqueness, its own unique value to it. They can act as treasured collectibles as well. So it's a combination of all five which are required. Depending on the nature of the industry, you'll have to kind of figure out what's the best ratio and what's the best number for each and every token in your economy.
Great.
I would add to that the biggest thing I believe in the tokenized world and crypto is the risk appetite. There is a lot of volatility in crypto, and a lot of tokens, ICOs, you name it. There is a lot of volatility, So the first thing that someone needs to decide when they start getting involved into tokenized tokens, they should know first what it's all about. They should know what they're getting involved to, because a lot of people now hear the buzzword Bitcoin and get involved, but they can have swings, double-digit swings up and down, and unless you have the capital to sustain your losses, it can be a very painful experience. If you go away from the crypto space and you go into, for example, NFTs, non-fungible tokens, you cannot exchange them. They are wholesome. You cannot divide them. They're indivisible, and they are unique. And their price is set between the buyer and the seller.
Right.
So you can have a big uptick if you involve, let's say, NFT artwork. You can have a big uptick in the price agreed by the consecutive buyer of your NFT. If you take a token which is fungible, which is more of a standard, and it's divisible, like let's say Bitcoin or Satoshis, that differentiates, because there you have a lot of factors that come into play, which is more than a supply and demand between two parties. It's more the supply and demand of a whole market. So coming back to the risk management, I think the first thing you should know and should assess is what is the risk factor when you're involved in certain tokens. I think, for example, property tokens are more stable and secure than if you would get into crypto or into ICOs or even STOs. So I believe that before you do any kind of tokenized transactions, you should learn about the risks and the regulatory framework that governs the token that you're dealing with. Because as we're speaking, a lot of tokens, especially ICOs, are in unregulated jurisdictions or just plain unregulated, especially the utility tokens. And from the 2017, 2018 ICO market crash, there's only a handful of ICO tokens that are still operational today, which are doing good, relatively speaking, but more than 90% has disappeared off the market. And that's something that people need to take into consideration when they get involved in all of this, is to know what kind of tokens are you buying. A utility token, basically you have no rights, whereas an STO is a security token, and depending on which jurisdiction you are, if you are, let's say, in a crypto-friendly country like Switzerland, like Zug, then it becomes easier to deal with those cryptos. If you are in the United States, it's a little bit different because it's fragmented. You have the Securities and Exchange Commission, but you have 50 states that have their own rules and regulations. And then you have a state like Wyoming, which is in the middle of nowhere, which is not even a capital financial center like Wall Street. And they are doing crypto and blockchain. And now Miami is coming up. And New York was up there. Malta wanted to become the blockchain capital and crypto capital. It wanted to become the blockchain island. And still, Malta did not achieve its objectives of regulating the market. So together, I find the most important factor that you need to look when you tokenize something or you get involved into any tokenized assets is look at the regulatory framework around that token and look at the risk appetite that you're willing to undertake when you want to buy or sell that particular token.
Right. Very, very good points to be noted for those who are planning to tokenize their assets and maybe do an ICO or an IO. Thank you so much. David, do you have any questions for our speakers?
Yes, thank you. I have one question for Jerry and for Harsh. So my question is, would you suggest that applying the blockchain into the supply chain of, let's say, jewelry or any other product which has big value would not only ease and adequately work for its supply chain, but as well to add value to the product itself?
Harsh, are you going to answer?
You can take it first because I actually did not get the question clearly.
I think it's tokenization of supply chain. How is it beneficial to the product itself, I guess?
Well, in simple terms, tokenization of assets on blockchain, you can prove provenance. Provenance means like where does it come from? For example, if you take a collectible car and it was owned by, um, let's say Michael Jackson, whatever, that if it was on blockchain and if the car gets sold in the process and it's all registered on blockchain, you could prove who was the owner of the car at a certain point of time. The same with jewelry. If you have special jewelry that might have been worn by Lady Di or Lady Gaga, and that is, put on blockchain, you can prove that, and that in the process might increase the price because
Yeah.
you can prove that that was something special worn by somebody. It was not your average jewelry, your average watch. It was worn by somebody, and that could increase the price. So getting everything registered on blockchain has a lot of advantages, and it could even increase the price of a particular asset, especially collectibles, non-bankable assets, vintage cars, whatever you want to put on there. It can add a lot of value because you can prove the provenance where it comes from. But it's easier said than done. Certain things, again, you can put on blockchain and you can quite do it easily with a nice smart contract. And if you have a good coder, you can code it all nice and perfect with a nice lawyer to tell you all the intricacies of regulation. But some people have tried to put things on blockchain which are quite difficult to value and to regulate, and then it becomes a problem. The thing to notice is we are at the beginning stage of tokenization. Tokenization eventually will go the way it's going to go, and it will be used more and more. But we are now at the beginning stage. If you think when securities came out, for example, in the first securities were regulated by the SEC, and they would use the Howey test, which dates back from 1933. And you actually had the Howey test, which is from 1933, applied to ICOs. So you have something that's almost 100 years old law. Actually, it was in 1934. It was a decision by the US Supreme Court that is used to determine whether there is a financial contract in an ICO. And there was a lot of discussion about that back in 2017 and 2018, because a lot of people would say, no, it's not a financial contract. It's simply a utility token which you use in a closed ecosystem. So the same runway that financial instruments these days have will happen in the tokenized world. Financial securities, when they first were brought onto the market, before the rules and regulations were applied and made into law, it took a lot of trial and error, a lot of fraud, a lot of mistakes, a lot of money gone lost, because financial securities would have to be defined by law. And now, if you get involved into financial securities on the financial markets of today, everything has been tried and tested. Everything is standardized. Everything is set in law, in rules, in regulations. And the whole market works in tandem with the Securities and Exchange Commission. So there's no room to change around the security. They have a certain form, and it stays that way. And that will happen as well with tokenized assets. The key thing that needs to happen, not only in tokenized assets, but also in the crypto world and in the blockchain world, there must be regulation. There must be certain standards that everybody adheres to. And if that standard is applied worldwide, then it will take off. You have to look at it in the same way like in the beginning, we had cellular phone in the US, we had 3G in Europe, and in Japan and Korea, we had WCDMA. So we had all these different networks on different frequencies. So if you had a mobile phone, it would work maybe in the US, it would work in Europe, but it wouldn't work in Japan. And then 3G came out, and Apple produced the first smartphone that worked on all frequencies, and that changed everything around. And so now you have a worldwide network, 3G, that's going into 4G and into 5G, where you can use your phone. And this changes everything. So if you standardize the whole tokenized world, it becomes easier to make it global. When everybody can use it, it has network effects. And then people can participate in that regardless of which jurisdiction they live, because everybody works with the same standard. And that, I think, is the most important in the tokenization of assets and crypto. It must be regulated on a global scale for it to work the way it's supposed to. We are now just at the beginning stage.
Totally agree when it comes to regulations. Thank you so much for
Yeah.
explaining that so nicely, Jared. Harsh, would you like to share something, add on to that?
Yeah, Jyoti definitely made a lot of interesting points over there. I would kind of like to add the own elements of it too, right? So supply chain by itself is an extremely messy and a complicated process, right? If you look at it, the entire during the pandemic, we were hilariously outgunned and had extensive shortage in terms of product availability, shortage of masks, and a lot of other tech products as well, right? If we had through blockchain, we could have standardized that, simplified the entire process, right? Instead of having like multiple contracts, each and every contract, the essence of blockchain is you can easily track where it came from, where it's going to. It has a lot of trackable element to it, right? That kind of streamlines the entire thing. It adds accountability to the entire thing. At the same time, you're not dependent on a central authority, right? It's completely decentralized. The benefit of that is the transparency is higher and it's much more faster. So because the process is streamlined, that could itself add some more value to the product side as well. That because the entire process is smoothened out, that could enhance the value of the end product in a way that now if something would initially take like 2 weeks or 3 weeks to travel from one part of the country to the other, now it's probably taking lesser time. You don't have to worry about a lot of value in terms of setting up legal contracts, right? Smart contracts is like the cheaper way of instead of getting into complicated legal contracts which could cost thousands of dollars. So you can add a value addition over there as well. So there are multiple ways in which the blockchain can add value. At the same time, the point to which Jerry was mentioning, right, have standardized across the world. It's gonna. I foresee that to be extremely difficult because across the world, each and every country kind of has their own sensitivities, their own thought process, their own biases, right? So we probably need to figure out like the current currency system where each currency trades with the other at a multiple which is determined. We need to figure out how we can have those kind of token economy over there as well, where the currency and the exchange is facilitated from one country to the other at the same, so that even you can do the exchange and yet it is extremely smooth as well, rather than having kind of like a uniform structure across the world, because that could be very difficult to apply.
Hmm. Yeah, David. Hopefully, you got your question answered, right?
Yes, it was very clear. That was exactly what I was looking for, and I hope that a lot of companies will be willing to take the advantage of a blockchain as if implementing it into their supply chain, which would not only ease the transaction, but to add value to the company, to the investors, to the stakeholders of these companies.
Perfect. Thank you. So, Harsh, I've got a question. So we know that ICOs in the past, especially when it's all like was hot, were mostly scams back in 2016, 17. But fast forward 2021, I believe fundraising using tokenized assets, tokenizing your product is one of the most efficient method of fundraising. It can be, as long as there are certain parameters to follow. If you could share, like, how can we make this method of fundraising more effective, more authentic? Yeah.
So essentially, the current the already the point which I mentioned earlier, right? Stablecoin has been a good introduction in the current setup right now, which was not there 4 years back, right? So that kind of adds a lot of credibility in terms that it's not just a cryptocurrency; it has some real world connection as well, right? So that kind of adds some credibility to it. Additionally, you need to have like a combination of the security token, the utility token, stablecoin, NFT, etc. It needs to be worked around well, and the token economy should be essentially very sound, right? Back in 2016-17, I used to read a couple of white papers, and the token economy would not make sense to me whatsoever. and people would pump in millions of dollars. And in fact, I think during one of the presentations which we had, one of the startups, one of the founders mentioned, then they ended up burning $35 million of funding that they had received. I'm not sure if it was with you or it was with Kyle, but the startup founder, the founding team, they ended up burning through $35 million of money within 1 year, right? So that is what happened because the token economy was not sound. In essence, the most critical aspect of having a successful ICO is the token economy, right? How sound that is. I would kind of like to reference to the E3T tokens, right? They are extremely sound in terms of the exchange mechanism, how they are structuring it, right? That would kind of be like a benchmark for me to kind of ensure that how you make it extremely sound, extremely efficient, and have like lakhs of people who are already getting into the acceptance mode of it. At the same time, I would suggest trying to get into the ICO too early is probably not the best move. You can probably create a small level token economy, get the initial users, get them get some momentum going, get some traction going. Once you have reached that critical size, that critical mass, then you can look into the ICO options, because back in the day they used to directly launch ICOs with millions of users, and it turned into junk. So that it should not happen that way. Even if you look at it, the conventional IPO, right? You can't have a startup going directly to an IPO without proving different stages of what your company is capable to do. So likewise, even to go to an ICO, you need to have a stable token economy running for a couple years. It's smooth functioning. It's extremely efficient. People have kind of bought into that, and then you go into an ICO through the typical formats. Like you have like the private sale first, then you go to a public ICO. Those kind of combinations can come later at the end. That would kind of add more credibility to the ICOs.
I'm sure. Thank you so much for sharing those insights. Jerry, over to you.
But I fully agree with what you say, Sonny, and also with Harsh. I found the ICO concept in the beginning a great idea till the whole tsunami of frauds hit everybody in the face, and it really destroyed a nice business model of raising money.
Yes.
You could raise money very quickly without going through the classical ABC fundraising rounds and angel investors and so on. You could just raise money and do a project and make it succeed. And people raise incredible amounts, incredible amounts. And so instead of taking that and making it work, and like I said, only a few handful, at least from what I know, ICOs from back then, from 2017, are still operating today. They ruined the business model and they destroyed the trust of the ICO market, because they could have taken that money and make it work. Because if you're raising 10 $20 million and you had a plan to raise only 1 million, I mean, if you're raising 10 times as much, you should be able to make your project come to life, to make it work. And that's the unfortunate part. Then you had the ones that came up with ICOs which didn't make any sense, like bathroom blockchain, crazy ideas that didn't make any sense. You would have a token that you could sell to your friend and to buy bathrooms and toilets or something like that. I've heard the craziest stories of people doing ICOs, and crazy enough, they even managed to raise money on just the craziest of ICOs. And that's the reason why we're looking at ICO 2.0. We're looking at STOs, because in the ICO format, you had no rights whatsoever. You were an investor and you had tokens. And these tokens, if they turn out to be worthless, you lost your money, and there's not even a recourse to the company that is based somewhere offshore in Belize or Grand Cayman or whatever countries that were coming up back then. So the STO format brings some kind of seriousness into this whole ICO market, because now you have lawyers and they look at the law. They look at rules and regulations applicable to a security, and they try to apply that to a token. Now it's not as easy as 1 to 3 to just convert the laws and regulations regarding securities and transpose that to a digital security. It's not the same. And for one thing, blockchain and all that is borderless. So you need to have, first, you need to start off with a jurisdiction where you can sell your security. And that was one of the big problems with the US. In the US, you cannot just sell securities to anybody. It has to be an accredited investor. So even if you were selling your security outside of the US, you had to make sure that that person couldn't buy your security. So you kind of had to prove the provenance of the ownership of the security before you could buy and sell it. So it posed a lot of problems. And even today, as we're speaking, there is problems. But if you go now to a crypto-friendly place like Switzerland, where FINMA is doing what they can to make crypto an acceptable coin and to make all of STOs and digital securities regulated. I mean, there's not laws passed, but there are guidelines. There are banks that are now already getting approved by FINMA to trade into cryptos and securities, digital securities. It changes the whole market. And with it, it becomes more serious and you gain more trust from investors. Because investors, they want to invest money. They just don't want to be scammed or defrauded or lose the money. Now, of course, if you invest in a startup, there's always an element of risk. And because of the high risk factor, you have also a multiple on what the profit could potentially be if the project goes good. So that's why I believe that the STO model is the next step forward, and it should be regulated. And if it becomes regulated, then more and more retail people can get involved without losing all their money. And that's the key thing that has to happen for ICO to take off again in 2021. I'm even looking these days at ICOs that are currently happening, and I still cannot believe that people are still talking about utility token. Utility token is only special use cases where it can be functional. There's one a platform called Bank to the Future where you can invest in startups using tokens. That one is still around. They raised money, I think 33 million, and they are still in business. And that's something that is a logical thing. You can use that token. You can use tokens for identity, but it has to have a use case. There must be tokenomics involved in doing an ICO. That's why I think we have moved past the ICO, because the ICO also has a stigma of fraud attached to it, and we need to look at STOs. STOs is going to become big. STOs are being considered by lawyers. They are being designed by lawyers. And the key thing is, you're not just buying into a utility token. When you invest into an ICO, either you get a part of the equity or you get part of the revenue streams or profits that a project might make in the future. And that makes all the difference in the world, because you are secured somehow, especially if it's in a crypto-friendly environment, let's say Crypto Valley of Switzerland. You can have recourse in court. Whereas with the first ICOs, you didn't have any recourse in court. There was not even an applicable jurisdiction here. But if you have an STO that has been set up in a responsible or regulated market like Switzerland, you know somehow there is recourse. You are protected by law and you can go to court. And from that point on, the STO becomes serious. It gains a certain trust and credibility in the world of investors. And once a couple of STOs turn out to be success stories, you'll see other STOs come onto line.
Perfect.
So regulation for me is the number one for an STO to become a mainstream form of fundraising and investment.
Absolutely. Regulations all the way. I hope to see that we have more. I mean, we have been talking about regulating STOs for quite some while. I hope that happens this year, so that more and more projects, startups who are planning to tokenize assets and raise funds using STO actually make success, and so do their investors, right? As we know, it's a very more effective, efficient, and authentic method of fundraising, right?
Yeah, exactly.
Yeah, exactly. Cool. Thank you so much. Any questions, David, from your side before we wrap up?
As for your opinion, as you've probably been in this area for longer than I did, how long do you think it will take normal companies, let's say couples that might be listed in NASDAQ or etc., to actually get to use this change, to actually get to use the security tokens that might be providing them?
Well, it depends. I think if a company is already listed on the Nasdaq or stock exchange, they're not going to go on a crypto exchange. Or they're not going to go, on a Binance or whatever. They'll stay where they are. Now you see the big players, the J.P. Morgans, the Citibanks, Goldman Sachs, Morgan Stanley. They are getting involved into crypto, and they're opening desks. So they are looking at crypto and STOs and digital securities and assets. They're looking at it very, very much. And the big difference between crypto exchanges and the big institutional banks, apart from being highly capitalized, they have custody and they are regulated. And we come back to the same point, regulated. And they have a certain trust. So if they start trading into crypto, Bitcoin, whatever you want, they know that there is a certain trust between the financial institutions. So they have much easier to bring digital products to the market. If Goldman Sachs says tomorrow, we are going to do NFTs in artwork and we are going to sell Van Goghs that are tokenized on blockchain, people will buy it. If Christie's get involved, if the big auction houses get involved, jewelers, there is a certain trust that comes right then and there, and then it will just take off. And that's the difference between a startup crypto exchange, which has all the good intentions in the world, and the difference between one that has an established name and reputation and is regulated by authorities and operating in a legal jurisdiction. And that makes all the difference in the world. And once you see mainstream adoption of crypto, you will see automatically that DeFi, that blockchain, that digital assets and securities will take off big time. Those banks, they don't just get involved by rolling the dice. They know exactly what they're looking at the market. When Tesla is buying 1.5 billion worth of Bitcoin, and you have MicroStrategy buying 1 billion, and you have all this company jumping on the crypto gravy train, then you see that it is in the planning that in the near future, there is going to be more and more trading of digital assets and securities on the financial markets. So I believe it's a big thing coming our way. Tokenization and decentralized finance.
Yeah. So if you look at it, right, the point where Jerry mentioned, the fact that the big banks are even considering getting into crypto, that itself is a huge progress, right? Couple years
Yeah, it's a
back,
vote
the
of
big
confidence.
yeah, it's a huge vote of confidence. A couple years back, they would have kind of riddled it as a complete junk, that this is just some fad which has come and left and it's not serious. But they're seeing the potential in it, they're seeing the opportunity in it, and they're seeing that people are increasingly buying into it. So they've kind of been left with no choice but to get on this, because the entire way the crypto economy is structured, it's a huge challenge to these huge mega banks who've been kind of controlling the power with them. Compared to that, we have this decentralized crypto system where it's completely decentralized and the power is with the people. So traditionally they were not in support of that. However, now considering how the people are really heading towards crypto and people are showing enthusiasm towards that, and with the joining of the Arab whale earlier this year, then the announcement of Elon Musk buying $1.5 billion, it's kind of taken a whole new shape, and now you see big players like Mastercard and other big players joining it. So I think it's just a matter of time, and within the next 2-3 years, by that time we'll probably have made some more mistakes, and kind of as to Jerry's point, we'll have some more understanding of what the regulations are going to be, what the best practices are. Then we'll definitely have a lot more movement and a lot more traction into this space.
Perfect. Thank you so much, Ash and Jerry. Really appreciate your time and insights today. Let's take some closing remarks before we wrap up the show today. And thank you, David, for your participation as well. So, Jerry, closing remarks for the show.
For me, closing remarks is I believe DeFi and crypto is going to be very big, blockchain and artificial intelligence as well. And I believe the path that's going to happen is once CBDCs come into play, which have the trust and the backing of a central bank and a government, crypto is going to become very big. And if we regulate crypto and the whole digital securities and assets, STOs, I think it's going to be very big this year and the coming years. You will see a lot of digital assets and securities being traded on financial markets.
Absolutely. Thank you. Thank you. Raj.
So this could be completely rethinking the way we are used to the current world systems, right? When I kind of explained to my father how crypto and blockchain system works, how it's completely decentralized. Instead of having a central authority dictating what the currency is going to be, what the power is going to be, this is completely decentralized, right? So we have to this is a completely new way of thinking what the world is going to look like, how the economy is going to be structured, and the opportunities there is we can't even begin to comprehend. Jerry and I, we are supposed to be, working in this space for a couple years, and even we cannot comprehend what the future could be like, right? So it's completely rethinking how the world is going to be, and it's going to be really, going to be something which shocks even us over here at VCTV LATOKEN.
Yeah.
It's going to be completely shocking.
Yeah.
Great. Thank you so much, both of you, for your time and insight again and again. I would obviously love to have both of you back on another episode and another topic. So, viewers, audience, startup founders, speakers, investors, please feel free to reach out to us, and we'd love to have you on our panels. And again, keep on watching VCTV, and yes, keep supporting us. That's all. Thank you. Have a great day. Thank you. Take care. Bye bye.
Thank you. Thanks for having me.